Geoff, good morning. Thank you very much for joining us from London.
Morning.
You've got I should have probably thrown in the continued Brexit negotiations into that mix. I mean, but literally just kind of run out of time if we did that. To your markets and UBS, what is more important for global equities? Is it the trade deal or is it how Brexit ultimately plays out?
Absolutely the trade deal. So, that impacts, globally. I think a lot of the quote unquote, good news or the stable news and that we can get from Brexit, that's already in the price. So we're a bit of a holding pattern right now, and markets are just focused on, when we can get an election. That's our base case, an election, and then we can figure out, what happens to Brexit after that. But in terms of global performance, what we're telling our clients, absolutely focus on trade.
Okay, what happens if the trade deal goes south, if both sides walk away without a deal?
I think that would be the biggest risk to market performance at this point. And our asset allocation is, while not calling, for both sides walking away, it's just we're a bit more muted on the potential for something very comprehensive. This is a phase one deal. Even if it's signed, we doubt it means, all tariffs are removed. It doesn't mean that we can go to a phase two deal very, very quickly. It's just no escalation, and, that should be enough to keep things ticking along. But we have been here before. There's a chance of things falling apart, and we just want to be a bit more on the defensive side, especially heading into year end.
Oh, so do you believe then, Geoff, that the U.S. markets in particular have already priced in a successful resolution to trade?
I think not only that, it's just a non-negative resolution to trade in the shorter term, and also heading into next year on a forward-looking basis. We just caution whether there's any more good news to price in, for earnings. We're looking at about 5% earnings and growth for next year. Nothing spectacular. Probably going to outperform a lot of other markets, especially Europe. That's why we're overweight US relative to Europe. But at this point, we would rather own some protection, own the dividend yield, rather than own outright growth.
Okay, you're more optimistic about the United States stock market than the European stock markets. How much of that, if at all, Geoff, has to do with our Federal Reserve likely cutting rates more as the months and years go on?
Well, everything is relative, and clearly the Federal Reserve will have much more firepower compared to what Europe, can achieve. And Europe, we have this issue of the handover. People are still, trying to assess, what the Lagarde ECB presidency is going to look like. Is it going to be about monetary, or is it going to be more about fiscal? She was a former finance minister, after all. But if we want to focus on monetary policy and its positive contribution to equity markets, clearly the US is much more credible, has a lot more room to go.